Most people spend their entire lives trapped in a cycle. They work hard, earn a paycheck, pay their bills, and repeat the same routine month after month. Our story begins with just $100. No special advantages, no secret formula. Just a single decision that will eventually grow into $1 million. The question is, how? The answer isn't earning more overnight. It's learning how money grows when you let time work for you. Everything changed with a simple realization. Saving money protects your future, but investing gives your money the chance to grow. With just $100, our journey begins. Not because it's a large amount, but because it's the first step. The account is opened, the first investment is made, and from this moment forward, time becomes the most powerful asset in the entire story. The secret isn't finding the perfect investment. It's giving your investments enough time to grow. Compound interest rewards patience, not speed. Starting early, staying consistent, and resisting emotional decisions are what separate successful investors from everyone else. Markets will rise, markets will fall, but history has shown that disciplined investors who stay the course are the ones most likely to reach financial freedom. Wealth isn't built through one lucky investment. It's built through thousands of consistent decisions. Every month, another contribution is made. Every dividend is reinvested. Even when headlines scream panic and prices swing wildly, disciplined investors stay focused on the long term. Inflation quietly reduces the value of idle cash, but money that remains invested has the opportunity to keep growing. Small, steady actions repeated over many years create extraordinary results. As the portfolio grows, one lesson becomes increasingly important. Risk matters. There is no investment that guarantees high returns without risk. Diversification can help reduce the impact of any single investment performing badly. And for a beginner, broad investments can be easier to understand than trying to predict which individual company will win. But the biggest advantage isn't prediction. It's time. Then comes the moment every investor eventually faces: a market crash. The portfolio falls. Headlines become frightening. Fear takes over. But the disciplined investor remembers the plan. Instead of allowing one bad period to determine decades of financial decisions, he continues following his strategy. Markets are unpredictable in the short term, but the goal is to build a process that doesn't depend on predicting tomorrow. Eventually, the market begins to recover. And then something important happens. The portfolio reaches $10,000. The early stages were slow, but now the snowball is getting bigger. As the portfolio grows, investment returns can become a larger part of the total growth. But there is another challenge. Earning more money doesn't automatically make you wealthy. If every raise creates a bigger lifestyle, your investment contributions may never increase. The smarter move is to direct at least part of every increase in income toward assets. Instead of chasing whatever investment is popular, build a plan based on your goals, time horizon, risk tolerance, diversification, and costs. Once the foundation is in place, the next challenge is acceleration. More income can create more room to invest, but protection matters too. An emergency fund can help prevent an unexpected expense from forcing you to sell long-term investments at the wrong time. Debt also deserves careful attention. The key isn't simply labeling debt as good or bad. Look at the interest rate, the total cost, the purpose, and whether you can comfortably repay it. Then comes the biggest advantage of all: consistency over time. Month after month, year after year, the portfolio keeps receiving contributions. Eventually, $100 becomes $1,000. $1,000 becomes $10,000. And after enough time, the portfolio reaches $100,000. At this point, the snowball is no longer tiny. The journey toward $1 million is entering a completely different phase. Reaching $100,000 changes the math of the journey. Not because growth suddenly becomes guaranteed, but because a larger portfolio gives every percentage change a larger dollar impact. That makes patience even more valuable. Fees matter too. A small ongoing cost may look insignificant today, But over decades, money that leaves the portfolio cannot compound inside it. That's why understanding costs is part of building a strong investment plan. As the portfolio changes, the allocation can drift. Periodic rebalancing may help bring it back toward the strategy you originally chose. And then another milestone arrives. $250,000. Eventually, $500,000. You're now halfway to the $1 million target by dollar amount. But the most important lesson remains the same. Don't abandon the process simply because the numbers have become bigger. Once you reach $500,000, the final $500,000 is no longer just about making bigger contributions. Your existing capital is now a much larger part of the equation. But that doesn't mean you should start chasing hot investments. Popularity isn't a strategy. Instead, break the goal into smaller milestones. 500,000, 600,000, 700,000, 750,000, 800,000, 900,000. Each milestone is easier to manage than staring at one enormous number. Eventually, the portfolio reaches $1 million. But remember what this number represents. It isn't magic. It isn't guaranteed. It's the result of a hypothetical roadmap built around saving, investing, diversification, time, discipline, and the power of compounding. Real-world results will vary based on returns, taxes, fees, inflation, contributions, and the time available. $1 million isn't the real goal. Wealth matters because it can provide security, flexibility, and more choices in your life. The difference came from 5 simple habits: saving, investing, diversification, compounding, and staying consistent for the long term. Remember, this is only an illustration. Real returns vary because of markets, taxes, fees, inflation, contributions, and time. The journey starts with your first $100. Start small, build the habit, keep learning, and focus on your next milestone. From 100 to 1,000, 10,000, 100,000, and beyond. The journey is built through consistent decisions repeated over time. Start small. Stay consistent. Think long term. You don't need to get rich overnight. You need to build better financial habits.